25th. What day is the 25th? It's a Tuesday. That means I'm doing Taco Tuesday with some drinks tonight. Love my Taco Tuesday. All right, so the technique that we were looking at was where anytime there's a push, let me see. So like a push, the big dip, the bounce, and then the bigger dip, right? And then that's the bottom. So let's take a look and see what we have here. So we're coming off of this right here, which is the push, the dip, the bounce, and then the bigger dip. So that should, the way everything kind of plays out, so let's go back a little bit and see if it kind of plays out for us. And I'm going to rock this on the 5 minute. Okay. And I'm going to go onto the up run of this. Welcome in, guys. What up, Carol? We need to spend some time, Carol, because I want to work with you on building some bots here, some trading bots. So we'll get some time in the next week or so, and then we'll start getting that rolling, guys. All right, so and guys, if you're in the Discord, go post in the Discord for people to join in. Put the link in there. But let's take a look here. So now remember the technique is this one right here. There's all right, so I'm gonna screenshot this real quick. And the ideal is there's a move up. There's the pullback. So we have 1, 2, 3 comes up. And then the size of that pullback is supposed to be ×2. And then that's supposed to be the bottom. And now we start working the other way. Up, down, third wave up. So 1, 2, 3. That got his 500. All right. So I love the Savior. All right, so let's go look at the chart now that we know what we're looking at. So we got a bunch of programs that we got put together here, guys. I'm excited to kind of move on this journey, right? Don't forget, we're doing the Trading 102 journey, which is just simply um, getting into crypto and then going through this journey of crypto without really using any trading skills that I already have and my process. What I'm going to do here is I'm going to show you how we go to YouTube, find a good strategy, and then Trading 102 is reverse engineering, meaning that we tear things apart, see how they work, rebuild them so that we understand them, and then create them so that we can trade them. So the entire purpose of Trading 102 and the journey that we're on right now is simply to show you guys how to design and how to take theories and, well, at this moment here is how to do strategies, tear them apart, create them a little bit better so that you understand how they work, and then apply them and make trades, and then how to turn these trades into your profitability by using what you already have, which is what your goal is, but your trade structure. So fitting strategies into your trade structure with greedy entries and then taking data to see if these strategies work. So what we did was Google the top future traders, and we pulled up the number 2 trader, and we're taking her strategy, and now we're back testing it and pre-testing it and using it to see if it actually works. So, and it's just a 1, 2, 3 move, which if you've seen any of my other videos or been around me, it's something that I've been teaching and educating for the last 10, 15 years. It's a very simple thing. There's always 3 moves to a thing. But like I said, I don't want to go over my strategies. I want to find other strategies and then show you guys how to use other strategies to be successful. So the way it works here is there's supposed to be where when there's a down move, there's always like some type of finish. So she was saying 10-minute, 15-minute, etc. So we don't really, we got to go in here and design it ourselves. That's why I said we're in the phase of building our strategy off of this, off of her ideal. So the way it pretty works is that when it goes up and you end up catching a big pullback, right? Meaning the start of the down. And it's very simple. There's always a move that happens to start a reversal. Then that will always bounce. The reason why it will always bounce is because there's going to be people that are putting limit orders, right? To catch a pullback and then bounce up. Now, what that means is those orders fill, they bounce up, and then go back into a space that there were no limit orders waiting to bounce. So more than likely when they bounce up, they're going to run into a trend line on the way down, and then the people who are already on the up are going to be setting sells or reversal sell orders on there, and then the limit orders that it hits are going to push it down even more. The 1, 2, 3. So that's kind of how it works. So as we go through this, we're going to really build on that. So let's take a look at Doge right now. So what you're looking here is for reversal. So I guess we'd be really playing the short system, right? So right here we have we're going sideways, we get a push up, and then we see there's a move. We see there's a move here. There's a push up. There's a big drop, right? So let's zoom in on this section here. She uses Bollinger Bands, and I'm kind of like, I have them on here, but they really kind of just mess my view up. I like a clean chart. So this is a little hairy for me. Hit ones in the chat if you like the Bollinger Band. I'm not a big fan. I don't need the Bollinger Bands to tell me when something's exhausted because I use the RSI. So I think the RSI is going to be better. I'm going to get rid of the Bollinger Bands because they just suck. Yeah, I mean, because it's not giving us anything. It's not really adding anything to the trades. It's not really. Yeah, there's no real reason for it. Bollinger Bands are like clouds. What they do is they just kind of show you where the average. It's just like a moving channel or parallel channel, and when it breaks out of the little pieces of the cloud or the Bollinger Band, then it's supposed to be exhausted. But you can see it breaks out here on the Bollinger Band and then it goes up. The other part is that when it hits the bottom of the Bollinger Band, then you can expect it to go up to the top of the Bollinger Band. But the thing is Bollinger Bands start heading up too. So it's not like you're heading towards a support line, a resistance line, or some type of line that has rhyme or reason. So I'm going to get rid of Bollinger Bands because that's a terrible system. And when we learned it from, you guys should realize this strategy is coming from a woman who's #2 in futures trading, and she doesn't even know what patterns or things are called. That should let you know how simple trading is. Once you find a simple way to figure out how to do what everyone's doing, right? You got to be trading with momentum. You got to understand there's limits orders and they're going to be put on support and resistance, and when it goes down they're always going to hit limit orders, and when it goes up it's going to hit sell orders. And what you have to learn is to find where patterns are exhausted, and then and see the weakness and then play into that, right? So that's kind of what we need to learn here. So just so you know, if you're in the chat right now, it's one to ref but not leave on, like RSI. Yeah, I don't. It's just not something that I like. It doesn't do what it's like I said. It's not a support and resist. Let's take a look here. If I do have like okay, so this one has where it tells you there's a bullish pin bar, right? So, and a bullish pin bar, right? So see, like this indicator here has things that are actually a little more useful, because it kind of points out like a bullish candle, right? I'm not a big candle person, because there are indicators here. Let's say let's type in candles. So let's see here. We have candles, swing, failure, patterns, volume. There's so many indicators. I mean, you really have to like I said, I'm willing to start. The journey here is me acting like you guys, right? So you guys are going to go over here and be like, look at all these indicators, because you're going to see some YouTube, you're going to see some TikTok, you're going to see something, and you're going to be like, oh, look at this. There's this new candle thing, right? So this is kind of what you guys end up doing. There's so many indicators out there. So when you get one, not only are you getting the indicator, but then you have to learn how to adjust an indicator, because, they're all different based on how you trade. So this is why we're doing the journey, so that you guys can come along and I act just like you guys and follow the steps that you guys do. And then maybe by doing that, you guys can see that the process of developing information and data, it's always going to come back to a very same, it's going to be the same universal law, right? The universal law is we can only lose half of what we averagely win, and we have to win 4 out of 10 trades. So it's not that hard. It is simple, but it's not easy because you have to practice your skills and improve your skills. So I got a couple. Oh, here's order blocks. Okay. So I threw a couple candle charts on. I got order blocks. I got swing failure patterns, kill zone. And so I'm just, and how you guys do this, I'll show you guys. Let me get rid of that. Is if you're looking at something and you got more than, or you're checking. So now we have order blocks. You guys see this here? Now we have order blocks, right? Yeah, you got it. Yeah, you got to hand to the computer, big dog. So now now we got order blocks here, right? So a lot of people, use order blocks to kind of like see where the gaps are. Or is there a fair value gap? Fair value gaps. All right, so here's some. All right, so we put fair value gaps. And if you don't know which indicator you're looking at, you can just hit the little eyeball right here. And this is why I want to do this for you guys so you can see all that. So you hit this little eyeball, go to the indicator you want, hit the eyeball, and you turn it off, turn it on, right? This one doesn't have anything on the chart going on and off, so I'm going to leave it there. This one, okay, that's the order blocks. I'm going to leave that on. This one is giving me S&P, so now I know what this one looks like. Okay, and then this one, what is this? The kill zone super trend. So this is going to be the green and red, and then this is one showing me the bullish pin. Hold on, man. I got somebody at my front door. Give me a second. Oh, the waterman's here. I'll be right back. My water's here. Water's here, boys. All right. Gonna have my fresh water. Gotta get that spring water. All right. So, this is how you move your indicators on and off. See what they're saying. So I'm gonna put this one off for a minute here. Okay. So here we go. What did I want? Candle patterns. Not candle patterns. Is that what it is? Or is it the candle? There's one on here that shows you all the candles. Candle, what's it called? But this is how you look up indicators. So I'm gonna throw some indicators on here. Let's throw a volume profile on here. I don't think you guys ever seen this. So volume profile, guys, is something that you can put on here. Now, what this is going to be is basically kind of like a heat zone or heat map. It goes on the right side. It's not a candle on the bottom. It's candles on the side. And what that kind of shows you, if you guys see it here, it's basically where the buys are. So where you see all these spikes over here, let me change the color here. We'll turn the blue to orange, yellow. Let's turn the red. Okay, red's fine. Okay, so I don't need it that dominant. There should be a way to turn down the... All right, well, anyways, so that's a volume control. So normally when you see this yellow and stuff, this is where buys are happening. So it's kind of like showing you where money is starting. All candlestick patterns. There we go, Jeffrey. There we go. I don't really use candlesticks, but just so you guys know what's out there. But we're gonna go through these indicators here to see if they help with the current strategy that we're going to apply with what we're learning from the second person in the world, right? So we're getting an upward trend here. We're getting here is a bullish pin bar, and we got the bullish pin bar again. So we got two. We got the bullish pin bar. Oh, what is this down here? Holy cow. So does his... Oh, so this indicator doesn't move. So this indicator just prints. So if you move your... So it's in the middle no matter what. So if you move your candles up and down, the indicator doesn't change. I've never seen that before. That's pretty crazy. So he doesn't have anything built into the change, right? Okay, so here's our order blocks. So we have a top order block. We have the bottom. Where are the order blocks at? See, that's not even those order blocks. These are different order blocks. What is this? Oh, this is the fair value gap. I'm going to get rid of the fair value gap because I don't need that. Okay, here's the order blocks right here. Okay. All right, so let me shut off this. There we go. All right, so we got our order blocks down here. And then we got order blocks for shorts up here. We got the volume here. And this is why, guys, at the end of the day, I use a simpler system, but I just wanted to peek through here to see if there's anything, and we'll do this as we move forward in this lessons. Way too much to look at. Yeah, it's crazy, right? Order blocks, we're going to see if they actually matter. Here was an order block up here, came down, hit another order block, came up, order block. And you can see where these order blocks are. They're just basically telling you where limit orders are, which are just, you know what, let me add the Fibonacci. Okay. Morning water drink. Got to get that, you got to get yourself together with the oxygen. I keep the hair real low in the summer out here. It's 110 degrees. All right, so we're going to extend Fibonacci to the right. We're going, and that's why we have it over here. Okay, so here we go. Now we have order blocks, volume, and the Fibonacci, right? So you can see the order blocks are kind of just set up on the Fibonacci lines right here. So this is why when you're using so many indicators, they're normally going to be, they're going to all say pretty much the same thing. It just comes down to what you want to look at. The Fibonacci is going to have the lines where most people are going to put their orders or their order blocks. Hence the order blocks where they're going to put their orders. And the Fibonacci's are normally going to have the order blocks somewhere on those Fibonacci areas. So you could use the Fibonacci's. And they're going to tell you pretty much where order blocks are, because that's normally what people are going to put. So this is where you're really, what I'm going to show you is where the main indicators that people use, and then indicators that'll help you out. So over here we have, let me move. I don't need the price. Label position I want to the right. There we go. So now the Fibonacci's, I have them over here on the right side of the candles so that I can see them. They're not like in the mess. All right. So we have a 2, 2, 3, 6 right here, which is the resistance that we're getting. So we're in the lower part of this trend, and we're on the 5-minute volume. So now that we've had this big push down, this purple area here is going to be considered is that New York AM? Yeah, okay. Candle, kill zone, super trend, monospace, huge American New York. So this is the New York time. I don't know if, oh, I mean, it's just telling me it's the New York. Yeah, we'll get rid of that. First of all, I'm from Chicago, so we don't really keep too much from New York. All right, so we're going to clear that up. Okay, so now we're going. I don't normally get shit from New York, so. All right, so we're just going to kick New York out of here. All right, so let's get back. Let's get back to the basics here. All right, so we have our move here where we ended up with a big pull down. Now, normally after a big dip or any move, there's going to be the push up from the pull down, which is a reversal move. Then there's the second move, right, which is the continuation of the trend. And then the third move, which would be the next bounce, kind of tells you where you're at. So you notice here that the second and the third move there, the first move and the third move, they ended up on a double top. It's the same size. So there's really no volume here telling you that there's any type of forward movement from here. But on the other side, you can see that once it came down to here and these two little points here, when it did push up, it created this high. When it came back down, it found support, and then it pushed up and said that there's not a lot of volume here. But when it came down, it hasn't retested this support line, showing that there's a little more volume coming in. So that would tell you that at this point, you are now in what we call a consolidation, a cluster, right? We call it a cluster. That just means that the top is 8907, the bottom is 8805, and now the coin will bounce up and down inside of here. It just happens to be inside of Fibonacci's. The 236 is the resistance, and the 0 line is the support. So this is where the coin goes sideways until it decides what it's going to do. Now we do know, I do like this volume, right? This just so you know what it is. Okay, it's a VP. So if you go into indicators and you typed in VP, okay, it's called the volume profile. So type in volume profile, and that is where you get the volume on the side here. So I'm gonna put this over so you guys can see it now on the TikTok, right? This is the volume. Now I like that because what this means is we can see where volume or buy orders are. So this area right here is where we're going to see volume start to come into play, which is 8972. Okay. Now, when it moves up, if we can get it to 8103, that's where we could see a push and actually get it up to these higher areas here of 9199, and then the top of this area here, which is 9288. And then from there, we can see if the volume, you can see here the volume kind of goes away there. So that would be where we would expect this to come back down, but we'll have to deal with that when it gets there because we're going to have to see the volume. So what I'm going to do here to kind of give us a reminder of what we're looking at so we can go back is I'm going to put a box here. Okay. And that's going to represent the volume at that time. And I'm going to put the prices at the tip of the biggest volume and the lowest volume. So that's the end of that. And then this one would be here. All right, so there. So now when I go back and look at this in this box, I will know that the volume on the bottom was here. There was a spike of volume there. And there was an end of volume there. So I know where volume is. So if the volume does change, I will know by this box where the spikes of volume were so that I have a little more information that I can go back and look at, right? So that's just something you can do to kind of have your situation. So we know if we can get to this area here, we're going to have a spike. Currently, we're in the lower side of this. So we are in a buying zone. This red zone here, once you get confirmation, right? Because there's two moves here, right? So remember, the system that we're gonna use and we're gonna try and implement is a 3 move, right? Meaning when a move happens and it starts to reverse and it goes up and comes down, we're going to be looking for those moves. Now, the system or the trading that she uses is it's a shorting system to where once the move happens, she expects the first wave down to then bounce, and then the third wave to be double the size of the first move down, which is just wave 3 being twice as big as wave 1, and that's basically Fibonacci's. Not Fibonacci's, I'm sorry. That's what's it called, guys? Elliott waves. All right. So we're going to add a couple indicators here like rookies do. You know, make the chart real messy. So that way you guys can, I want to trade like you guys, make things messy. And then try all these new things, right? I mean, why not? Don't forget to share the live, guys. Elliott waves. Don't forget to share the live and get yourself in there. Let me see if I can, I'll put the volume on here a little bit. If you're in the Discord, I'm going to jump in a chat live trade. TikTok over here sending me a call. I'm already on, brother. Young, where you at, man? Hop in the chat. All right, so all right, so we got all that set up. So this right here is on the what we would call the third move, right? So we have a first move up, there's a pullback, and then that pullback would be the area that we would be considering to be entries, right? And I'm going to turn that one probably light green. And what that means is that right there would be considered our entry, because you can see that's where it found support and then it bounced up, and then now now you can see it's kind of like line 0, but now it's fighting its way up, right? And then the second time it came around, we have a little bit higher. We had 2 candles that touched this zone here. And those are the 2 entry points of interest for us, right? And the next thing that can happen here, and I'm going to make these a little bit smaller because I like to see my chart. And I'm also showing you guys how to maneuver on your trading view so that you guys can, let me move this up a little bit so you guys can see all my, let me pull this down a little bit. There we go. There you go. I want to make sure you guys can see the things that we're doing so you can see where we're going, adjusting sizes. So you can learn how to maneuver on your trading view and how to build into that, right? Whew, got to keep that hair short out here, man. It's 100, what's the degree? It's 90 right now. But it's only 9 a.m. Is it 9 a.m.? It's only 9 right now. It's already 90, guys. It's only 9 o'clock in the morning. All right. So now, technically, let's go ahead and throw in some simple strategies that are going to happen. We're going to be applying a 1, 2, 3 strategy that the number 2 futures trader uses for her shorts of predicting a bottom by seeing the third move, measuring the second wave down, and then when it bounces up, measuring that move, the first move down, doubling the size of the first move down, and expecting the move to up to hit a trend line and come down. So there's a little arrow here on the top left that you can hit and get all your indicators names out the way. All right, so let's kind of go over this to where we'll take a look at this chart here to see the short positions. And the way it works is this, right? Now, I want to keep a couple things in mind here. And you need to write these down because it is very important to keep the same objectives available so that you understand what we're trying to do here. Okay. So when we do a process, right, our entire process is based on this. We have to win 4 out of 10 trades, and we can only lose 50% of what we normally win, and we want to start off making that to where that's how we start. Now we might have to adjust that up or down depending on the results of our next 10 trades. So kind of like if I looked at my trading history here, I can see that this position here was a $90 loss, 16%. When I won, it was 36%. And this was me moving my, so this is a losing trade, but you can see I made 7%. Now it was losing because it didn't hit my mark of 30%. But I'm always moving my stop loss up so that way I'm not having big losses. Here, I want to average about 16% loss. Here I lost 27, and that was a mistake, and I didn't get my stop loss incorrect, so I lost twice as much as I should have here. This should have only been a $60 loss. I lost 130. Here, my $40 loss. Here, 7%, because remember, I'm going for 15 to 20, my 36. But this is what you have to do is when you go back and you look at your stuff, I can see here that I have 1, 2, 3, 4, 5, 6, 7, 8, 9 trades, right? And then I need to be winning twice as much as I lose. So my losses should be 60, my win should be 120, right? So here's this, and then this is considered a loss, a loss, a loss, a loss, a win, right? So right now, this setup is dragging behind, right? Which is okay, because we're going to make adjustments to that. But we're going to start from here and then reassess what we have going on here. So that's kind of what that is. Now, the other cool thing, guys, if you are new to crypto, go hit our website, VC. Everything is VC Crypto Nation. We use a very specific exchange. And the reason why we use that exchange is because they don't have crazy wicks. The fees are, the more you trade, the cheaper your fees get. We get cash back on our trades. And more importantly, I've been working with these guys for over almost 3 years. And we're developing trader-friendly equipment. So for instance, we have a thing where we do copy trading where I will and other good traders make trades, and then you don't, if you're too busy and you're working, you can just put money in and copy their trades, and you can have them make you money. The other thing is there's this thing called AI spotted patterns. So this is where you can click on see your report, and this will actually tell you this. I love this new stuff that's coming in. This is going to tell you how you were. So you see here, it's called, so right now, for the last week, they're calling me the comeback kid, right? And I'm going to take a screenshot of this. So basically, for the last 2 weeks, where am I? Okay, for this last week, yeah, 8:15 to 8:21, they call me the comeback kid, right? Falls down, gets up, still profits. But at what cost, right? So my profit and loss, I made $2,000. So I'm up $2,000 that week versus last week where I was up $2,300. So remember, our goal is to make $1,800 a week. So that's where I'm on that pattern of the journey. So there's my 1900, there's my 2300. I made 183 trades. Now, the reason why it's that high is because I'm also testing and back testing and everything, but that number of trades is going to go down because now as I do the journey and as I move forward, I'm not going to be trading that like that, but we're still going after our profits. So here's our profits. It also has the percentages, win, loss, right? So my win rate is 30% because we were seeing if we traded like, remember, this is a brand new trader making trades, and we're developing. I want this to be like a real journey. So it's kind of like we're testing the trading of, you know, making moves where you see support and resistance without anything else, right? Not adding anything. We're going to keep adding things to increase my skill level. But I have a 29% win rate, average wins and losses. So averagely, you can see here, averagely when I win, it's $293. And when I lose, it's $81. Oh, you guys can't see all that on there. Let me just let me copy this here. Okay, I'm gonna save that. Okay, I'm gonna move this. I'm gonna make this smaller so that TikTok can see this. There we go. How come I can't? There we go. Let me see if I can. Do I need to expand that? Okay, so you got the red lines. I mean, I think I just come over here and move this over. Okay, there we go. So I'm just gonna move this over on. It's easier for me just to move the screen on TikTok. Okay, so now you guys can see what I'm talking about. So here, they call it the comeback kid. I'm up 1,981 last week. The week before, I was up 2,340, 183 trades, right? Right, you guys all see that. So now as we scroll down, we start to look at the information that we want to dig in here. So now it breaks down win, loss, profits, and that's where this comes over here. So now on these charts, we can see my win rate. My win rate is basically, I'm down actually this week. Remember last week I made 2,300. This week I made 1,900. I'm down 10% on my win-loss percentages because I was making a lot of trades off of this ideal that was out there, and it didn't go well. But that's part of being a new trader. You're going to try these new strategies because I'm building my own strategies. So I'm going to have up and downs in there. So normally I'm trading about 40%, like we said, 4 out of 10 trades. And this last week, I was actually 3 out of 10 trades, right? And then the point of this is to show you guys that when you guys understand the universal trading 102 universal trading rule, that you win twice as much as you lose, it doesn't matter if you only win 3 trades out of 10, you will still be profitable. Okay, and this information here is why I'm going to show you guys how that works. So here we have my average wins, right? You guys can see right here, my average wins is $294, where my losses were 81. Now I got to clean this up a little bit. I want to get that down to about losing 60 and winning an average of 120 to 200. Still in the same ballpark. Now you can see here we had XRP. My average move was 43x. My main trade was $1,185. My biggest loss on that side with that XRP area was 360, and that happened because I didn't put my stop loss in correctly, and there was this big candle that happened, and I paid the price. So you guys ever enter a trade and then don't put your stop loss right away, and then there's this giant candle and you lose all your money? Well, that happens to the best of us. All right, so now behavior, right? The good thing about having this type of thing here and using this process. So if you guys want to use the right tools, then you need to set yourself a BitNex account, and you can get that at my website. We have the link for you. It's a VIP link so that you get extra credits and more bonuses, and we have a lot of giveaways and rewards that we do. So guys get $400 or $500, $200, 2,000, but we have a lot of things. So use our VIP link, and we can help you out. If you already have a BitNex account, go to the videos where we talk about getting exchanges, put your BitNex user ID number there, and we'll see if we can get you some rewards. But this also thing has behavior, right? So revenge trading, right? So this is where a lot of people lose money. And I wanted to do this and show you guys the reality, because you guys aren't paying attention. You're not writing these things down. And that's why we use BitNex, because we had them design this tool that we're using so that when I teach people how to trade, and eventually I'm going to put an entire trading course on BitNex where you guys can go watch my videos. But I'm doing it live with you now, so you're ahead of the curve. But I wanted to show you where you get punished for trading incorrectly. Ed, anybody? Okay, I see you guys in the Discord. Can you guys hear me? I'm turning on my mics. Let me see. Let me know if you can hear me in the Discord.
I can't hear you in the Discord. I cannot.
Let's see if I can hear you. All right, go ahead and talk.
I'm only hearing you through TikTok. I was
Oh,
not hearing
well.
you through Discord.
All right, okay. So you're hearing me through TikTok. Okay. The weirdest thing is that
Can
you
only
guys
hear
are actually
through
in my
TikTok.
ear on TikTok, but not on TikTok. Okay. Why is that not coming through for you guys? Yeah, that should be it. All right, so I can hear you guys too. So if you guys haven't used this tool yet, it's a real tool. It's right there. It's just basically you just click the AI information in your thing, and you can see your behavior. So we did this one here, which was revenge trading. That's why I had so many trades, because what we were doing is when we lost a trade, we got in a trade, we were chasing a trade, and that was because there was so much momentum. So this is just to show people that when you revenge trade, right? It's kind of cool. They have all this. Detected when you open a new position within 5 minutes of closing a loss with a larger size 1.5 times or reverse direction, right? So when we did that without getting greedy entries, we had 31 times that cost us $600. So revenge trading is not always, it's kind of like showing you guys what you guys are doing. And I love this new tool that was put in. And we, it took, like I said, we've been working for 3 years with building a platform and an exchange that's willing to help the trader out to get better. So detect it when you have a new position within 5 minutes of closing a loss. 31 times we did that. Now FOMO. Notice this time around I didn't do any FOMO trades because I was focusing on revenge trades. So detected when opening a position after the price has increased by more than 5% in the past 15 minutes without holding the trading pair for 24 hours. So that's more like in the swing trades, where you let something run and then you jump in and you kind of like things start rolling, right? Leverage escalation, right? Detected when you increase leverage by 1.5 times or more after 2 consecutive losses, right? So this is where when I took a loss and I reset myself and I realized I needed to be greedy, I increased my leverage on my greediest entries because I was even lower down, and it allowed me to get back the positions that were too close or not greedy enough, right? Stop loss rate, right? The proportion of positions open this week with stop loss orders set. 97 of my trades I opened, and they all had stop losses set. Now, I did pay for that one $300 loss because I didn't get my stop loss set in time. So it does happen to the best of us. Okay, trading DNA, right? So I'm a day trader. I trade 15 minutes, medium holding every 24 hours, right? 35% long position. My ratio is 65%. So I'm pretty balanced. So my longs go for 60%. My shorts, I close at 39%. And the reason why my shorts are 39% because my target is 30, and most of the time the shorts during that week was going against very high volume, so you really couldn't really hold them that long. So I took 40%, and my longs, which I averaged 30 to 40%, I was able to get. I went for a little bit higher of 60% because I had better volume in there. Okay, now worth continuing needs attention. Trading patterns that make you money, trading patterns that cost you. Right, and this is basically here. You found success with XRP longs across 28 trades, particularly when the asset was trending. While the win rate in the trading subset was 50%, the broader 20 to 50x long category also attributed to the gross, right? So we had our average XRP longs for 300. Yeah, so it just kind of lets you know this is this fucking Doge trade. I didn't get my stop loss set, and I was only supposed to lose 40, 50 bucks. I lost 300. I hate that, but it happens to the best of us. So this information here is we're going to start showing you guys how to use this information so that you guys can start piecing together how to get better, right? So I can share now. And you guys can, I'm going to have this. So we're building all the tools I need to move to the next thing that we're building, which is basically me being able to help people get better at trading, but also getting the information I actually need. Okay, new AI on BitNex. Recap of your trading. Post yours. Every week. So everything here is that we can see what everybody does, right? And then I can literally look at this and say, oh, you're doing 3 out of 10, you're in there. But what I wanted to show you guys is that you don't have to have a high win rate to be highly successful at trading. You just have to win more than you lose. It's really and that's why we're focusing on that part of what we're really teaching. Okay, so that's what we'll have there. So let's get back to our that makes sense, guys? All right, so now there we go. I hear some. If you guys are in the Discord, go ahead and talk a little bit.
ABC.
There we go. What's going on, man?
You guys are in the Discord, go ahead and talk a little bit.
BC.
Yeah, can you hear me?
There we go. What's going on, man?
Doing good.
How you feeling, man? You hear me?
Yeah, can you hear me? Doing good.
I have to mute you on TikTok and then try and listen to you while I'm or talk to you on Discord.
How about now? You hear me now?
Oh, now I hear you. Great.
Perfect. Okay, I just had to make some adjustments.
So
All
pull the
right.
chat. I dropped the one that hit me yesterday on the spike down.
Yeah, there was a, you got to, because we got the one stop loss. I was just like, I was so pissed about it too, and I'm like, you bastard. But then we went on a run for like $1,000. So
Yeah. Oh, I had several good
This
hits
was
yesterday,
such
but I
a-
had that one that I didn't set my stop loss on. It tagged me down for 100%.
Yo, VC, you hear me?
oh, yeah, I can hear you.
But the nice thing
Yeah,
is,
no, you
I'm
don't
only
get
running.
so that's where using that little box and then just having a stop loss put in before get through the whole trade. You know what I'm talking about when you go to set a
Oh
trade.
yeah, I know. I know the routine. I just
I
didn't
learned my
follow it.
lesson that other day. I was just kind of like cruising, making trades, and when it hit me, I
Hey,
was
V,
like, "Wow."
real quick, can you share your
Like you
screen
don't
on
expect
Discord?
it, but say again.
Yeah, it happened. Can you share your screen on the Discord side as well, or no?
Yeah. Let me see. I guess we'll do window. How about that? That work for you guys?
Yep, that works.
Yeah, I got it.
All right. Yeah, it was just man. I got lucky there too, man, because the trade was like 3,000, and that spike was like instantly to 10. And I was like, it was just crazy. I was like, damn, that thing could have got me for $3,000.
Yeah.
Terrible way.
Well, and I'm old
now I'm using
school
the
from
box, but
our
I was up.
routines before. I only put in 30% of my bag on any one trade, so
Mhm.
saves me from being completely blown out.
Yeah. Yeah, you got to protect yourself. So, but I started using a little box again. I'm like, you can't cut corners here.
You can't cut corners here.
Nope.
Let me see if I
Let me
can.
see if I can.
All right, that's a speaker.
That's a
Speaker
speaker.
volume.
Speaker volume.
All right, we should be there. Perfect.
We should be there. Perfect.
All right, so
All right.
yeah, as long as we're focusing
as long as we're
on, like I said, the
focusing on,
universal
like I
side
said,
of
the
it,
universal
of
side of it,
just really
just really
putting yourself in a position where
putting yourself in a position where
you're just
you're
simply
just simply
focusing on
focusing
whatever your trade strategy is twice as much, right? And really your skill level, whatever you're winning, that determines what you're able to lose. So you can still lose 7 out of 10 trades and still be profitable. So that's kind of where we're doing the starting of the journey here of like building out an entire process for a newbie trader. It really just comes down to, and it looks like we're reversing here because now our Fibonacci is reversing to the downside here. Let's see where we're at here on Doji. Yeah, we're at the top of the 15. Yeah, we're definitely consolidating here. All right. So the process, I think, Ed, you there, Ed? So what we were looking at was the double moves, right? So
What we were looking at was the double
we have
moves,
our
right?
push,
So
our bounce,
what we were looking at was the double move.
and from there it pretty much solidifies the support area, which right here is 8852. And then we have a channel now. That we're looking to break out of. Now, what was interesting about that, about her process there, the 1, 2, 3, was it gave a target. It gave a little something on that side. So when she had her ups and downs, like this big breakout, there's a big move to the bottom. We can try to see all these. So my thing is, those moves have to be after some type of breakout. So we're kind of in the position right now that we were in before we got a bigger move on there. Now I haven't even looked at the full. Like I said, I'm not doing right now. I'm not doing my trading strategy. I'm piecing together how we can kind of just bare bone this for a second and see if we can learn something. So if we go back and we look at this chart here, see if I can, there we go. We can see here that we went sideways, and then once there's a breakout above the resistance, we have that breakout there, and then this is where it gets a little tricky, because that philosophy that she's building, you know, she doesn't have, what she's doing is she's using the Bollinger Bands to get out of what they call get out of the volume zone, or the oversold area, which is going above the Bollinger Bands. And then from there, she would determine that she would look for her trade strategy, which was wait for the pullback, let it bounce, and then the pullback should give you that times 2 in a move. We're not going to use the Bollinger Bands, so we're going to use the RSI. Or should I just use, okay, so we're going to use the moon indicator. So that way we just have something that we're consistent on, right? So once we have the breakout, which happens right here, this is where we get a breakout from the support and resistance from here. And that is where we get some double tops in there. Okay. So this right here is kind of what I'm talking about. So the ideal is you find your channel. We see that we get a breakout on this channel. Now, while going over her strategy, we're also going to start seeing, so her strategy is more about finding what she calls the bottom, which is basically she's shorting a short, and then when the short is done, she's going long for the reversal. But she's shorting and then she's longing. So she has 2 trade process. But the 2 trade process starts with the short, right? And so we have 2 areas here that we can go look at and see basically what we were, the pullbacks, the shorts, and then the reversal. And then we'll compare to where we are on that. And this is the one we were looking at the other day. We can see that there's a consolidation. I'm going to drop this down a little bit for you guys here. So we looked at this yesterday, where I'm going to turn this yellow because that's what we have. There was a consolidation, and I'm just going to use the box because I don't like the middle yellow line. I'm a person, I don't like a lot of stuff on my chart. I like to be very clear. I like just I'm looking for 1, 2, 3s. But like I said, we're doing this journey as a new trader. So you guys are going to put trash on your charts and we're going to go through those moments. So I don't think I need this line here. So basically it's when there's a breakout. And we can see here, there was a few breakouts here. And I guess that's the bottom support. I guess the top support. Looks something like this. And we can see that it's just trading from the bottom to the top. There was a slight breakout here. There was no retest. Came up, hit it again, hit the bottom, goes away long, and then I guess the only real breakout happens here. Then it's supposed to retest here, and that's where most people would buy and go up. It didn't work out for them, so that was kind of, people would have took a loss on that. It went all the way down to the bottom, and then normally that's the one we would be buying, because we know if it fails to break out and it gets its further retest, we go back up to that support from the bottom of the channel to the top. So this never really breaks out of the channel. And eventually what happens is it goes up, it hits, and its breakout is actually the reverse, where it breaks out down. Then it bounces, makes its third move. So this would be the opposite if we actually thought about this. So this would be in her philosophy, not her philosophy, but in her thought process, which is just a 1, 2, 3 move, or the waves of the Elliots, right? So there's a few different things. What would be happening here is, since we never got a normal trade of a breakout from a consolidation, a retest, and a big run, wave 3, that then gave us a pullback, a bounce, and the move down, then this would actually be in a scenario where the reverse happened. It never broke out, it actually broke down. And then, so the ideal would be that it would be the opposite of what we're looking for, which would be, here's the breakout. So once there's a breakout, the ideal would be you would get and she does a trend line. So it would look like this. When there's a big candle down and then it sets up, what it would be is she puts a trend line on those candles. And then all right, so these are big dippers. So the trend would be something like this as it breaks out of its pattern. And I'm going to make the trend line yellow. Or light pink. There we go. So philosophy would say that it's supposed to pull back. Once it does its pullback, it's supposed to try to find the trend line. And then once it hits the trend line, it's supposed to go the other direction for twice as long as the first pullback, which basically would be from this point to here. And then what it would do is it's supposed to come back to the trend line, reject, and then head the other direction for a double size move of the original pullback. Which would put a target somewhere on this white line here, which is why we had that white line there last night. So that's kind of like the target that's supposed to get into. Had this played out, the way the strategy was supposed to kind of be. But on the second move, we actually, when we got to the trend, we didn't have the big explosion as we expected. We ended up creating a channel, which is what we were just in here, which is just a sideways channel. And it, instead of blowing up, it just started to run sideways. And then what happens here is, this is what we're talking about right here, is a normal trade pattern that most, remember, we're trying to trade with the masses. So the one thing that masses do is they have to have confirmation, meaning that there's support and resistance, and whatever it breaks from, there has to be a retesting of the support or the resistance line, and then it goes back to its original move. So if it breaks out, it needs to come down on a second move down, retest, and then third move would be higher. If it breaks down, that's move one. It has to move two is the retest, and then the third move is supposed to be bigger. So there's always those three moves. So as long as you got that in your head, you can kind of put yourself in a position where you're hunting very specific moves. So here we can see we finally get a scenario where there's a breakout of the resistance line. There's a retest of the resistance line, which qualifies for a trade where you start to see the momentum where it doesn't break down, it starts to head up, and that opens up the door for you to get into a scenario where you can get an entry on the next pull down, which you can see this candle pulls down right there, and that's where you would, that red candle right there, when it goes up, this next green is where you would be looking to get an entry. Okay, and then this qualifies as a trade. So now that it's moving in the upward direction, the theory or the trade strategy that's in play is that eventually, now that it's made a move, it will find a top. It will go red and make move number one down. It will bounce up, right? Now the very first thing I have to do is put a trend here, right? So the ideal is, remember what the trade is that once there's a move down, there is a, and I'm just going to use the same arrow, there's a trend line, right? So the trend line would look like that. right there. Something in that spot. It would look like a trend would be here. So your last green arrow, your red. So it would be something right there. Okay. That would be the trend line. So the idea would be once it starts back up, you don't need the first move down. You don't need to know where the first. What's up, Morto? Morto, what up, baby? Yo, Morto, let's tap some fingers, guys. Morto, we're gonna be going live, man. Mondays and Wednesdays, but we're gonna hop on, Monday through Thursday, 9 a.m. Eastern, 9 a.m. Eastern, and go for a couple hours on a new thing I'm doing, which is where I do a trading journey and I act like a brand new trader, and we just walk through the process of developing strategies and rules so that you guys can become profitable immediately, right? So the ideal is there's a trend line on the two green and red candles, those tops, and then you don't need to know how far it goes down, but when it bounces, your job is to catch the bounce, and when it hits the trend line, that's where you would be placing your entry for your short. And then the ideal is whatever the pull down was, which if we measure this, it pulled down from the top of there 0.87, is that the next move, when it actually comes back down, it will come down from the trend line, that move, and the equivalent to that first move for sure, but it should do up to 2 times that move. So those are your 2 targets that you would be using for this. Now, me personally, that second move down is a beautiful move, and it's nice to always make that extra money. But in the strategy, or in what we call the universal trading rules, I don't go for the grand slams or the home runs. I go for more of guaranteed. So we would go for that, just matching the original pull down size. So this first section here would be my target, and then I would, if it's running and it keeps going, then this would be the second target that would close automatically. So there's target 1, target 2. Okay, so when we measure this from here to here, you can see that pull pack is a 0.87. So if we're doing a 20x leverage, which we're going to, I think we're going to start off, yeah, right? I figured if I trade and behave like a brand new trader, I can walk through a journey, right? A trading journey instead of a course. I can do a trading journey where you guys can see how to take strategies, reverse engineer them. Then I can give you tips of what you need to do to find out how to look at something, understand why it's working, because they all work the same way and they all do the same thing. And once you understand trading, every indicator is pretty much the same indicator. The only difference is the bells and whistles when you develop an indicator is if you add things in percentages to make the indicator respond different. That's why I built my own indicators, because I built in what I wanted to see from an indicator based on how I trade, so that way it fits the strategy correct, right? And I'll show you guys as we go forward. We'll learn more about my indicator, but Right now, we're just going over the basis of, the simplest concepts that every time there's a move, there's a retest and a push. And every time there's a pull down, an exhaustion, there's a bounce and then a bigger move down. Just because of limit orders and people putting orders on Fibonacci, supports, and resistance, it is all the same. And once you understand the 5 fundamentals of trading, then you'll realize you don't need to go do a million researches into something. You just need to follow really basic rules. Target 1 is closing half of position. No, so what we're doing here is we're not going to close half of the position. We're going to move our stop loss, and it's going to either get stopped out or it's going to hit the other target, right? But I'm going to show you that in a second. So this is just looking at the basics and saying that, okay, if we're doing a 20x on this, this would create a 15%. This would create a 15% target if we went to here. So then I know that my first target is 15%. So what will happen here if I made this trade and I was in this trade and it was heading down, okay? How this would work out is very simple. Once it starts to head down and it reaches a 10% move, I would move my stop loss from the losing position, which means that my stop loss would be 10%, which would be something like, we'll just say that my stop loss is here. Once my trade starts to get momentum here, you see how it's starting to go down and it reaches, it would probably be this point right here. When it hits that point right there, right, and has a pull up, which happens on this next candle, and then it drops down to here, right? That would be about my 15%. I would consider that a target, and I would put my stop loss at like 10% and say, worst case scenario, I'm going to get stopped out at 10%, which happens here. So I would have got out of this trade right here. It doesn't continue on for me, but I made my 10%. It's not the 20 that I needed. I consider this a losing trade because I didn't hit my target of 15% because we were targeting this spot here. We didn't quite get there, but I was what they call moving and adjusting your stop loss, trailing stop loss. I moved my trailing stop loss to 10% and I actually got stopped out, which is okay. So on here, I would probably get stopped out somewhere around there. So about 10%. And that's how it happens sometimes. Another thing you can do is most of the time, if you're waiting, there's a bounce. So you can see here, this pulls all the way down to here. It doesn't hit our 15%, which is terrible. It bounces, and then once that starts to head back down, which happens here, that's where I would take my stop loss from its original position up here, and I would slide it down to my 10% area here, and it would get stopped out right here for sure on this candle here. This candle right here and this candle right here would definitely stop me out. So that's where my trade would end, right? Now, once that happens, right, look at what's on the chart. You guys see on the chart, right? Oh no, I got all these things on smaller sizes so that I can focus on what's important, which is the patterns of the 1, 2, 3 move, right? So you see, and you can see here by when I'm moving the price, the price thing, it doesn't matter because we're not actually using those for targets. It's just an example of where my stop loss would be, and then I would move it to a position that, you know, as I start to gain process. Now the thing here is that once this happens and I get my first pull down and I get my bounce on that pull down, right, because I'm in the trade now and it starts to go down, because remember, we're entering this trade because we had a pull down, it bounced, and it created the trend line entry, which was right here. That is the actual trade that happens. And then we have our target set up here, and then our big target here. So that's the actual trade. Now, once I'm in that trade and it starts to make its move, which happens over here, which is I get my first move down, it bounces. When it bounces, right, that's the bounce up and starts to head back down, that's where I move my stop loss from a 10% loss to a 10% gain. And on this particular trade, I would have got stopped out on that next move because it's reversing on me. Now, what I want you guys to understand is when that happens, we are once again I got my hair so trimmed up out here because it's so hot. But once that happens again, you can see that what's happening is that we're actually getting a bounce to up. We're getting a second pullback, right? Because this is the second time it happened. The original pull down and bounce, and then the short trade happened. That was the 1, 2, 3 move, part 1. Part 2, when it does it, which is push up, comes down, and it starts to level out there. This is where your skill level, as you get better, you'll realize that you're consolidating again and you're going sideways, which is building momentum, which means you're probably going to reverse here, right? But this is where we're going to have to add another indicator. We're going to add a little bit more to that because you need something to confirm it, right? So just like the 3 moves, when the 3 moves happen, you got to realize that you also need confirmation of a move, right? So we haven't added that part of the strategy yet because we're, like I said, we're new to trading and we're developing things that we need in the process. We need to figure out how to make this scenario better. And really, honestly, you got to start with the basics of just starting to see when something, so we have a saying, and the saying is this: when a trade doesn't do what it's supposed to do, then we know what it will do. So this trade was supposed to fall all the way down to this area down here, somewhere in this area here. It didn't even hit the middle area. And then it bounced up again, and then it started going sideways, right? So all that right there is kind of like a telltale sign of that it's not doing what it's supposed to do. So then we know what it's going to do, which is the opposite, which is why we see this big explosion here and it takes off on us, right? Because we went for a short a little bit too early and we paid with another explosion, right? Even though we're following an example of a normal short that normally works. But keep in mind that, once again, you're going to be 50-50 on trades, or 40-60. You're going to win 4 out of 10. 6 of these trades are going to try to fool you, and you're probably going to get fooled if you're a newer trader or your skill level is a little bit down and you haven't really fully took the time to get your skill level of understanding volume and what time frame you need to be on to see consolidation. But here, this is why we're doing the journey, is so that we can walk through every trade that happens and start to realize that there are very, very simple things that you can see that can tell you what's happening, and you can start to create a process of determining when something isn't doing what it's supposed to do, so that you can change directions. You might only be up 5%, but being up 5% is better than going, well, I'm going to see what happens, and then it jumps on you and you lose 10 or 15%. When you could have been positive 5%, even positive 1% is better than negative 10%. But this is part of the journey. As you start to see these things, it'll all start to make sense for you. I'll move you guys over here for a second so I can read your comments. VC, go to the settings on the lower right and change orientation to horizontal. You want horizontal? So I'm on the PC. This is like TikTok Live Studio. The problem is if I go to the layout, okay, I can switch layouts, right? So let's say I go to screen orientation can't be changed when you're live and recording. So right now I can't change it while I'm live and recording. What I can do is I can grab this and I can make this bigger. Is that better for you? All right. So we can see this pattern played out here, but it didn't do what it was supposed to do. And it ended up breaking up on us. But if you're doing this trade, my old eyes, and don't forget, you can go to, who is that? Hold on. Just the boy. All right. So I was going to say to you this, so you could go to the Discord. In the Discord, I'm sharing my page, and you could see it a lot better. So you might, I don't know if you've ever been on a Discord, but if you go to the vccryptonation.com, there's a video on Discord. There's a video how to use Discord, and then you can go to our Discord for free. And when we do these type of things, you can see it. And this is also going to be recorded. And then on the recording side, you can go, if you want to watch this, I'm live right now on YouTube, which is also VC Crypto Nation, right? So you can, there's a lot of places you can see this right now. So it's live on YouTube, and you can go back and watch this, and the YouTube will have a bigger chart and very more clearer. You can go back and watch this when I get off, because I'm going to be getting off in about 30 to 40 minutes. Okay, so let's get to this trade real quick so I can kind of show you. So this trade does its pullback move, but it fails, and then once your skill level gets better, you're going to realize that, oh, this is reversing, and then you would have got out with a 5% or a break even, and then you would have caught this big up move that happened, because you would have realized the trade is changing, right? Now, the next time this happens, let's go back here and kind of piece together the big move. Now, once again, once there's a big move that happens, the ideal is that you make a trend line from the green candles that are happening, right here. So once we get that big takeoff, you would try to set up a trend here, which I think and you want it to be on the highest level. So it's, you don't pull it down so it touches all of them. Take the two that are kind of like, you don't have to take the high one that was like third, but we're going to take these two here, and then it'll be a little bit higher. It's going to look something like that. Okay. But that would be the trend line. Let me make this a little bit thicker. That, because what it's going to do here is going to touch the top of this one and the top of that candle. That's going to create our trend line. Now, when this pulls back, the ideal or the strategy that remember, this strategy is coming from this woman here, Steal the Simple's trading strategy from the world's #2 futures trader, right? So she's a trader.
Profit,
this is
or
her
my
strategy,
stop would be maybe
that she's
somewhere up
using.
here.
If you've traded options before and you keep being right about the market but still losing money,
Where that trend line was broken, if we go to close.
So what we're doing is we're taking this hey baby, what's up? Good morning. How you feel? Okay. So now let's get into our Doge here. And the idea would be that once there's a trend line made, she has a move down, move one down. Then when it bounces, you would put your entry when it hits the trend line. It's supposed to reject, which means your entry would be here. And then the next move down which would be here, would be twice the size of the original down move. So once again, if we measure this here to the trend line, then her idea would be that it would normally do twice that. So then we end up again with a scenario where that's one target, and the other target would basically be a simple double bottom, meaning that once it hits the trend line, it would go to the bottom of that. And that, to me, is the support line of an up and down channel, which is more likely to hit than the double move down. Now, the double move down to here does kind of give you the idea that you have made or reached a bottom, which would then show you that there's a reversal. But when you're targeting a trade that you might be asking for to, you want to remember, the goal here is to make the most law of average and possible trades to be successful. So when we measure this, we can see that here, from here to here, is about a 1% move. So the thing is here is that we're doing this trade on a 5-minute time frame with Doge, and we are getting a 0.8% move. So if we're doing a 20x, a 1% move would be 20, a 0.5% move would be 10. Now normally the goal is to find a strategy that gives you 15 to 30% every single time, and you set a target of 12% profit, and you trade $5,000 per trade, which means you're making $500 per trade. And if it runs, you can easily make $1,000 to $3,000 a trade on the ones that run. But without having any of the running, just by collecting 10% on every $5,000 trade, you can end up doing this trade once a day, twice a day. Let's just say you do it. Let's just say you do once a day, right? So the math on that would be a $500 trade. We do it 4 times a week, $2,000, right? That's our goal. Remember, when we set this up, if you don't know what the goals are, how we did that, go watch video 1. It's called day 0. The goal is this: if you want to make $100,000 a year, you have to make $1,800 a week. Okay? And and then you can break that down, $1,800 down by 10 or 5. So then you know how much you have to make per trade if you want to do 10 trades, or how much you need to make with 5 trades. But the bottom line is, no matter how many trades you make, you got to crack $1,800 a week. And if you make $1,800 a week, that's $100,000 a year. Well, if we do it this way, which we just showed, if we were doing a 5-minute trade strategy using this particular strategy, we are getting a 0.8% move back, which means if we're using a 20x leverage, we would be getting a 10 to 15% target every time we've seen this so far. So our $5,000 trade with a 20x leverage is producing a $500 win every single time, which if we only did this 4 times in a week, we would make our $2,000. So this strategy that we're onto right now, and the process of developing it, so far we are on the right track to earn $2,000 a week and having a trade that produces winning scenarios. Does that make sense to you, chat? Hit 1s in the chat if that makes sense. Because what we have to do is, we have goals here of 100,000 a year. We have to make 2,000 a week, and we have to be able to, when we hit our trades, we have to say, if we did 4 of these trades a week, does it hit my goal of $2,000? So hit 1s in the chat if that makes sense. So far, so good. So far, so good. This trade is working. So now we're going to walk through the scenario again. We go sideways, as you can see here. Let's walk through this again. Let's see what we're doing. We're consolidating here. It has a breakout, as you can see. And now let's go through the process again. The breakout happens. Later, Jeffrey. I hope this is helping you out, man. If it's helping out, it's great. So now the process is, well, once there's a breakout.
Always helping, man. I greatly, greatly, greatly appreciate you doing over this stuff.
Once again, we get a red candle. Yeah, I mean, I figure, we just go on a trading journey, walk through the process of a new trader, and we should be able to, solve all the questions that we normally don't cover. So
I pulled out old school
candle,
VT small bag a little bit
now,
ago.
we now have another trend. Say it again, brother.
I said I pulled out the old school VC small bag sniping trades.
Oh yeah,
Popping through at the channel.
I mean, so
on
that was the thing.
5-minute
Like,
channel.
we really, you have your 4 bags. Yeah, you have to, you trade, you do your 4 bags, you trade small, you hit your targets, you double and triple your bags, you double your size of your bag. And, when we looked at it, it's always good to have those things, whatever it takes for you to, like, get yourself in a position where you are making more than you lose. It really, is the entire, like I said, The only thing that matters, the universal trading law that matters here is very simple. You win twice as much as you lose every 10 trades. It doesn't
Exactly the
matter
target.
if you're losing 7 trades and winning 3. Well, right. As long as at the end you're losing properly and winning properly, you can mathematically and systematically build a trading strategy and system that makes you a profitable trader, even though you are only winning 30% of your trades. So that's why we're doing the trading journeys, because the mentality of everyone, when you get into all these YouTube courses, YouTube traders, TikTok traders, all these people that are teaching or trying to explain their trading philosophies, everything or the videos that you watch, it's always these winning 100%, 300%, 2x, 3x, and they just don't explain that they lost 10 times before they got there. They don't explain that the only thing that matters, it doesn't matter, all that other shit doesn't matter. You have to win twice as much as you lose. And you have to mathematically build a structure that basically makes that happen, where you win twice as much amount of money than you lose, and then a strategy of your trades that produce that same reality. You have to win twice as much as you lose. So mathematically and systematically, you just based on your skill level, whether you win 3 out of 10, 4 out of 10, 5 out of 10, the system has to have it when whatever you do, you have to win twice as much money than you lose. And that is all you have to do. Doesn't matter
Exactly.
what strategy and all this other shit or what you're doing. You just have to mathematically know that, okay, my skill level is every time I win a trade, I make $100. Well, if every time you trade, you average $100, not, don't take your one time you did 300, you know, and you just take your normal. So if I make 120, 150, I go to $100, right? Because I'm not averaging 200. I average 100. It might be 110, 120, 130, but it's not 200. So then I say, okay, I average $100, which means when I lose a trade, I can only lose half of that. So which is $50. Now, when you do that, you can say, well, I don't want to, I'm going to start even better. I want to work on my entries. I'm going to bring it down to where I only give, or I could only lose $30 every trade, and I'm targeting 100. Now you have your structure of when you set up a trade or enter a trade, you have your stop loss set at $30. Your target is 100. That's your structure. So when you go to enter a trade, if it doesn't give you an area of stop loss that looks really good, then move your entry down to where your stop loss is, and that's called a stop loss entry. That gives you that extra space where if it does go against you, you've created twice the area. If you're new, you go down to you do a stop loss entry and then go to another stop loss entry and do the second stop loss entry, and that way you're protecting yourself even more until you start to see the trades happen and you realize, well, if I would have did the first stop loss entry, I would actually hit. So once you start developing and getting better, you can start moving the entry up a little bit higher to get it. So that way you're not in trades losing, trying to figure out your entry. You're in trades that are not hitting, and you're moving up until you hit your entries and finding that, learning that your skill level on your entry, because the only thing that matters is the entry, right? So all the ways to do it or whatever you're doing, at the bottom line is whatever conclusion you come to of why you're about to enter a trade. There's a different 100 million ways why. Is when you go to enter, you do a greedy entry and do it a little bit lower than what you think, or a little bit lower than the support line, or I like to do the second support line. And once all that's in play and then you start to see the trades play out, you can see whether you're right on the first entry. And even though let's say you did a second support zone and the entry bounced ahead of you and you're not getting into the trades, you're not losing there. In your mind, you're thinking you're losing because you didn't get in the trade. But in reality, the majority of the time, you would have got stopped out if you used that process. And now what you're seeing is, you're catching the ones that you normally get stopped out in, and they're becoming your winners. And all you're really doing is eliminating your losses by not being in too early. So when you understand that and you start trading the opposite, it's not about the gains, it's about the entry. The better the entry will automatically give you more gains. Because if your trade normally goes down 20% before it goes up, that's 20% that you should be winning. By doing a better entry, you would get an extra 10 or 15% because your entry is greedier. You don't get greedy by trying to let it run or trying to get higher areas. You get greedy on the entry. That's where you make your money. If a guy enters at $1, he won't make as much as the guy who entered at 80 cents. And the guy who entered at 60 cents, he made twice as much as the guy entered at $1 and 50% more than the guy who entered at 80 cents, right? So there's always, the entry is where the money is, okay? So,
Exactly.
and that's really the
And
process.
that's what I've really
that
been
we have to
focusing
really
on is my
build.
entry.
But that's all you need.
Yeah, because well, I mean, when I first started with you, God, what are we at? 4 or 5
Yeah,
years now? I
entries
don't
are
know.
everything.
I've been around forever. Um, when I first started, I mean, my entries sometimes were, I was minus 25, minus 30, minus 40% with cost average buy-ins. Um, now I'm averaging 3.5 to 5%. So I mean, I'm pretty happy with my entry points nowadays.
Yeah. Yeah. I mean, because once you like we used to do the trick. That's why I said there's a million tricks to this, right? The old
Oh, yeah.
trick was track your trade, right? Where you would write down what the average pullback was. So it'd be like, oh, this trade went down 27% before it went up. So you track down your biggest pullback and then you write down the highest that it went before you got stopped out. And then if you're pulling back 27%, 20%, 23%, 18%, 25%, you can say to yourself, when I go to get my entry, I'm going to go ahead and move it 15% lower because I'm averaging 20% on the pullback. So I'm going to turn that negative into positive without
Yep.
changing any way that you've decided that you're entering. That's just your skill level. Whatever, that's just your trade strategy. It just always seems to pull back an extra 20%, right?
That's the way it was originally. Yeah.
Yeah.
I struggled with it quite a bit.
And then when you started making that adjustment, how'd you do? It got a lot better, right?
Oh, I'm doing, like I said, I'm averaging 3.5 to 5% if I'm making a pullback at all.
Fucking crazy. And
But but then there's also 40 to 60% of the time that I'm too high and it doesn't even hit my entry point, and I'm going, well, that's maybe next time around. We'll see.
exactly. And the mindset is to think you missed a trade, but you don't realize that you lose more than you win. And sometimes when you are in a trade and you're getting greedy entries, what you're really doing is eliminating half of the losses you used to get. And now you're turning some of the losses you used to take into wins because you're so greedy on your entry. So it's like you don't realize you've cut out 50% of your losses, even if you see 3 or 4 of the trades that you didn't get because it didn't pull back far enough. You're winning. Right. Now you're really 6, 7 out of 10 trades. You just don't know because you didn't get into them and suffer losses on the other ones.
Exactly. And then, I set myself I shoot for a 20 to 30% net volume, or net profit every day, every time I trade.
Or you go for 25%.
Yeah, 25% net for the day.
Yeah.
So like, even with that 100% loss yesterday, I pulled back. I was able to still pull out a 22% for the day overall for my total bag.
Nice.
So I'm at that $900 bag. My total for the day ended up being $200 for the day profit.
That's all you need. Because you get that, you find your 10 little trades, right now you're rocking out your 5 trades a week or 4 trades. Eventually that bag goes from 900 to 3,000, and you're going to get to the part where you will have your $2,000 week, whether it's 4 trades or 5, and that's $100,000 a year.
So I gotta jump. I gotta get on a meeting for work.
Yeah, so, appreciate you, man. I know you've been around for 4 years. I'm glad you're in the zone.
Catch up with you soon.
Later, brother. So that's what we're talking about, guys. Is like there's so many ways to explain the systems that we have. What's up, Scotty? Be chilling, Scotty. And they all work, right? And the reason why I'm always like, we used to do different courses and explain them different. I make a lot of videos because we have to make videos to where it makes sense to people, because sometimes people believe or they learn differently, right? And now I realize, we got to go back to day one, which is just taking the journey and just focus on there's 2 things that matter: win twice as much as you lose, and how to fix your entry. Everything else will work and play out perfectly with the other stuff. Those 2 things right there, that's how you become a profitable trader. He literally lost an entire bag. He didn't get his stop loss in, and it wicked him out, and he got liquidated. And still at the end of the day, he still made his $200 goal, right? So it's crazy when you understand, all the different ways that we've developed how to protect your bags, how to show you how to do things. Now, the 102 University is simply just putting you guys in a position where we're just giving you the very simple, cold facts of this, and how to be productive, and how to be a good trader and be highly successful, and how to make $100,000 a year. It's really easy. Not easy. It's really simple. All right, so let's go back into our trade here. So far, how this trade would have worked here is there would have been a high. It would have created a trend line here somewhere, something like that, and that would have been your entry. And then what would have happened is the first move down would have measured out here to the trend line, which was somewhere here, which means it would have played double from the bottom of it, which would be here. So now on this one, that would be the pullback that would be considered the bottom, and then this would be the pullback that would be considered the middle target, right here. And in this scenario, we actually got the second target. And how it would have played out, we actually would have had, remember I told you, once we go into the short and it breaks down, which would have been here, and it bounces up, which would have been here. Once we got this retracement to here, that's where it would start down again. In this position, and we would move our stop loss to here, doing a trailing stop loss. So our stop loss would start basically, here's the entry, our stop loss would be somewhere up here. Once that moved down, there was a big wick down and it bounced and it started back down, our stop loss would have moved in this position here. And then once it broke past that and hit this level down here, then our stop loss would have moved to the middle of the entry point there. And then basically we would have hit our target. So we would have hit our full target here, which would have been, once again, 0.8, which is about 30%. So we're hitting our oh no, it'd be 20, it'd be 15. So we're hitting our 15% here every single time. So the trade is definitely pulling through on that scenario. Now, this right here on this big pull down, you get this bounce. We call this short the bounce. We would have basically, when it bounced up, you could have went for a second short. Depending on, like I said, we're going to add to this and add more, a little more information, because you kind of need confirmation here to add more to our strategy here to create extra shorting opportunities. And then we could have actually grabbed another short position here, because you notice here that when it bounces up, which is right here, it then pulls down right here, and then it starts up again. But when it starts up again, it doesn't break up. It hits the resistance right here again and starts to head down, which would trigger us to think, well, maybe this is going to continue down. And we're going to add some indicators. We're going to add a little process to determine that this is actually, so what we think is going to happen actually happens. And then we get into that trade and then we kind of go across. I think we're, yeah, we hit our stop loss on our Doge long, which is okay. So basically, that's what we're working on right now. And this trade is starting to pan out, and we're starting to see the way that we can use this particular strategy a couple different ways to create to find a bottom, to short a certain way, and then have an understanding of our target zone. So it's starting to come together. It's starting to come together. So we're definitely starting to see that. Now in the downward trend, because that was the upward trend, we can see here that the process that we're just kind of like focusing on is having more success, where there's a push up, there's a pullback, it bounces, and then there's a massive pullback, right? Which would basically be, if we measure this pullback to the top of a trend line, which would be here. So you see the top of this, it starts to head down. There we go. We now have a trend line. Here's our 2 points to a trend line. That creates this pink bar, our trend line. Then we have the move to the downside. And then the move is, or the process is that when it bounces, you target the trend line as the entry. You can see the pink trend line. It does hit the pink target. And then the ideal is that the original move, when it went down, which was 0.87, which is from the top of the trend where it started down to the bottom before it bounced up, which is right about here, that it would now go twice as, would double down the move, meaning that it would pull down as far as the first move, and then it would pull down twice as much, which means the target would be here. And this actually does hit the target again. So it bounces, goes up, and then from here, it does hit that target. So when the trend, or the I need to stay focused on this here. When the trade does have the momentum or the process of you trading with the trend, meaning if we're in a downtrend, then we can actually get to a spot where we're going to hit that second level, which then creates the next move, which is where it bounces up. You can see it goes sideways. This is what I'm talking about, a double move. There's move 1, there's move 2. This is going to hit a double top. It should pull back, find support, and then it should break out. It doesn't break out, and once it doesn't break out, depending on other, like I said, we have to add some factors here. We could look for a short down from that position again and actually double up and catch another massive short here. So this way of looking at the trade and putting these strategies in here are going to allow us to get into a position where I need to target this at 60. There we go. Okay. It's going to allow us to, process how these things are happening. And we're going to add to this strategy to make it, get a little more confirmation with it, with the moon indicator of what's going to happen. So we have a little more confirmation of where we're going, the best time to do it, and then clean this up a little bit so that we can trade and get the best opportunities for the trade that we're tracking, right? So far, that's kind of where we're at. So this ends up going down. Here's our bottom, right? There hasn't been a breakout. Currently, this is the new, where we're at right now in live marketing. You can see here we go sideways. We just broke below the support, and now we're bouncing. So here's what we have. We have a bounce. If it rejects there and starts to head down, then that means we would have another short. But we can see here that we're already kind of sold out. So what I'm expecting is this bounce to actually continue now that we actually broke, right? So this is where, as we move forward, having the actions of a trade, confirmations of a trade, as we start to build the journey, we're going to have these things that we can kind of like use for purposes of, and you'll build your own. When you see a pattern, you'll start to piece together what it looks like, what and what you want it to do. So here we have a downside, we hit again, and now that it broke the support, which is right there, we'd expect it to hit it and then reject, but we're probably going to hit it and push up. But like I said, once we get on these, now notice here, remember we set these volume indicators up. Oh, Control Z, baby. Control ZZ. Okay. We set these volume indicators up here. This was the peak. It's still the peak. That's the peak. That's the peak. So we're still in the same zone, except, you see here, see how the volume indicator is now, this is where, see, this box was the bottom of that indicator originally, right? Now the indicator has moved down to here, showing volume in this area here. So now we're starting to pick up volume in this lower section. So we're getting to where volume is starting to pick up here, which is kind of looks like we're probably at this pullback here is probably the last pullback, and we're probably going to see a little push from here. But what we want to start doing, like I said, is we have to develop steps that we can rinse and repeat, so that when we see it and we enter it and we do what we do, it's something that we can just do every single time until it's not like thinking. When this happens or that happens and that happens, and you know, we do this and we enter. It's really kind of like what we're developing right now. So everything's coming together here. We're gonna hop on. I'll probably hop on tomorrow, and we'll get through the rest of. We're gonna see what this trade does, and start, you know, continue to build this out. Now that we're getting through these steps here, we have an idea of what we're gonna build. We can now start adding a little more things to this process, so we can start making some better live trades and more trades, because now that we kind of have an idea of what we're looking for here and how we're going to operate this, because we have to build this strategy. So far, I think we have the strategy down. Now we have to create the entries to this, and then targets and leverage. And that's about it. So we'll finish that tomorrow. Once again, we'll get in at 9. Ooh, time flies. So we'll hop in at 9 p.m. Eastern, 9 a.m. Eastern. And go to about 1 o'clock or 2. And that should take us to the process where we actually have the entire trade strategy mapped out, and then add some moon indicators to what we need here. Basically is the confirmation. So we have the strategy and the 1, 2, 3 moves that we want to see, but now we need to add an indicator. We'll add the moon indicator for the what we call confirmation of what we're thinking should happen, and confirmation of why it would happen or what is coming. And we're going to use the moon indicator, which is just an RSI with price action, with volume, and RSI with a MAC on it, to show us when people are buying, the sentiment, and then to show us the amount of money, and then the percentages of when the money's actually becoming enough to change the direction, right? So that's what we need here. And you're always going to need, if you're doing longs, you're going to need an indicator that gives you price action, well, basically sentiment, price action, and volume, in order to make the decision that the direction you want to go is going the way you want it. And then the next part of it is just following through on the 1, 2, 3 move to get the best. The next part is the best entries, and then that's pretty much it. So we're getting there. We just have to develop that. We should be able to get that developed tomorrow, so that way by Wednesday and Thursday, we can get some trades in, proper trades in, and then going into next Monday, we should have our full process down to how we're trading, why we're trading, where we're going to enter, setting our greedy entries, and then the rest of it is just collecting data. So we're pretty close to getting our first trade strategy built, And then we just have to put our trade structure to it. So that way the trade structure will basically be how you enter a trade and where your entry will be based on how much you're winning and losing. Yeah. So congratulations, guys. Oh, congratulations. We've found a trade that we like. We're using our 1, 2, 3. We're seeing how it executes. Now we need to add confirmation to the moves. And then we're going to add the structure for the entries. And then by Monday or this Thursday, we should be making solid trades. So we'll do a test of the trades Thursday. But by next Monday, we should be rocking and rolling. This should be a trade that we can do 10 times a week, and we'll post it. And we'll track its success. And then we'll see its results. So just adding some confirmations to them to ensure that we're successful. But that's our first trade review, develop, and then we just got to execute. And that's about it, man. So I'm going to close out this video here, and we will come back and we're going to see how this trade plays out. But we did have our breakout here below our support. The only thing, like I said, the only thing that can happen here is it could reject here and go down. If it doesn't reject there and go down, then we know that we're heading in the upward position. And that's what we're entering that trade here on this bottom level, because we expect it to actually go back up. And like again, from this level here to the top resistance line is 0.8, which means we can see a 15%. Let's take a look here. Yeah, we can see a 15% move here, just retouching the basics. So we can see a 15% move here, which is the target that we're looking for. So that pretty much sums it up, guys. But yeah, so touching, it's, you know, either going to reject and go down, or it's going to build momentum and break up. But this one should break up and then break above this support line or this resistance line. And then, because the volume, you can see here, the volume has started to show up a little bit heavier off of this area here. Yeah, the volume's coming in. It's starting to. So you see here, this is the volume indicator. I forgot you guys on TikTok, you don't see it all, but you're better off going to YouTube after this to see the full video. But you see the volume here? It was way up here. The volume was, where volume started was up here. It is now down here. See? So now the volume is starting to pick up. So if that we can get this price, which it looks like that's where it's headed. So we're re-entering another Doge long. We lost our first one, but now that we had that pullback and we're heading into the resistance of the support, we broke support. We're buying the bottom of the support break, and now we're going to ride it up. So we're long in Doge right now again. We took the loss on the first one. We're going to ride this one here. So we're going to set this up, and we're going to put this in here, and our stop loss is our 56. Our win is I'm going to put it at a little bit higher here, because I'm going to move so I'm going to go for 60% on this, but I'll move my stop loss here from 56. I'll move it up so that I'm safe. So you see how it's starting to move a little bit here? I'm going to move my stop loss up to the bottom of this. Little area here that would be the last time it touched. Right there. And then if it starts to move out a little more, I'll keep moving the stop loss up. Just ensuring that I'm taking less loss and then eventually just profit. So that's where we're at, guys. We'll hop into this. I'll go over moving stop losses, setting your greedy entries, and all that other stuff in very specific videos. Right now, we're tracking a strategy. We're tearing it apart to see how it works. Now we got to add a confirmation indicator, and then we just got to add one more indicator for the move, and then we're going to piece together the strategy that we just took, back test it. We're going to piece together how we want to use it and execute, where we want to use it and where we're going to execute with it. And then that is our strategy. And that's, we're almost there. We're a day, 2 days away from that. So within 3 days, like I said, by Monday, we should be in a position where we're making trades and we should be winning 5 out of 10. And it should be a 2 or 3 to 1 ratio on our money. And this should work out very well. So that's where we're at, guys. Other than that, man, good luck. God bless. Yo, chat, do you have any questions or anything like that before I end the live? Let me add this video here.